Stochastic RSI Scalping Strategy. How can we use the Stochastic RSI indicator to trade the market intraday? First, I'll discuss how the indicator is calculated so we can understand how it works, and then we will see how we can use it to build strategies. Hello everyone, my name is Ali Casey and welcome to StrategyQuant's channel where we discuss investing, finance, algorithmic trading, growing your wealth and everything else in between. If you are new to this channel, make sure to subscribe, hit the notification bell so you don't miss any of the daily videos that I post on this channel. Also, it would be amazing if you can smash the like button, share the video with others as this will help me push the message of investing out to the world. So this video is a part of a series that I'm doing on most popular indicators. Now, Stochastic RSI is built from RSI and Stochastic. And I did actually videos on both of these indicators and you can watch them through the link in the corner. And today we will see how we can combine both indicators into one and how we can use it to build strategies. So first, let's see how the indicator is calculated. If we go to Investopedia, this is the RSI calculation. It's really RSI is a measure of the average gain and the average loss. And basically then we normalize it so we can see it between a finite number. So this is the equation for RSI. And then the stochastic actually just measuring where the close sits between the high and low of whatever period you choose. So in this case, it's 14. So we're just measuring where this close will sit in the past 14 high and low, 14 days range. And then we do the smoothing. So if you remember, we did the %K is the C, and then %D is a smoothing average of %K. And then basically the slow stochastic is another smoothing average of %D. RSI is just actually a measure of the average gain to the average loss. And stochastic is a measuring of where the close sits in the previous period. So if the previous period range from 80 to 100, we want to see where this close is sitting between 80 and 100. So now we're going to combine both indicators. And the way to do that is to replace the close that we are measuring in stochastic with the RSI. So as you can see now, if you remember, this is the stochastic, is the close minus the low divided by high and low. Now we're dividing the RSI minus the low of RSI divided by the high of the RSI and the low of the RSI in a certain period. And of course, the best way to look at any indicator to understand it is actually to visualize it. So this is the Euro USD for our chart, and this is the RSI. This is 14 period RSI, just the default. And then below it, we can see this is the stochastic 1433. So this is the stochastic of 14 period with a smoothing of 3 and another smoothing of 3. So that's usually it's called the slow stochastic. And basically the advantage over the RSI is we have a signal line and baseline. So we can take the crossover or below the oversold or above the overbought. And now the stochastic RSI, you can see now we have the smoothings, which is, and these are the smoothing. And then we have the RSI length, which is the period that we are looking for the RSI and where it sits in the stochastic period. And from the chart, we can see that the stochastic RSI is a little bit schizophrenic. So you can see that it is not as smooth as the stochastic. And of course, maybe like look at this. So this sits here, this sits in the top. And of course, visualizing it, it's also difficult to tell the difference. So then we need to dig deeper to see, do they perform, is the stochastic RSI better or worse than the regular stochastic? And we might as well compare it to the RSI since it's a combination of both indicators. So I will do this comparison in a simple strategy in TradeStation. So here I plotted 4 charts and they are on the ES, which is the futures of the S&P 500. And it is 240 minutes per bar. So that's 4 hours. So each day will have 6 candlesticks. And I did it for 13 years. So this one has the RSI between 30 and 70 with a period of 14. This one has the stochastic 14 period and 2 smoothing, the %K, %D at 3 and 3. And then I have the stochastic RSI 14, and so the RSI is 14 and the period is 14, and then 2 smoothing period 13 and 13. And then here I have a stochastic RSI 6 RSI and 6 the stochastic period with 3 and 3. The reason is I found that this can be smoother. Instead of 14, I will do 6 and 6. And now I can see a smoother cycle than before. So I thought, visually it looks better to me, but I wanted to try it, with numbers. So I screenshot the images, and I did it because I usually trade the ES in a shorter session, which is between 8 and 3 p.m. Eastern Standard Time. So while this is tested on 24 hours, I also tested it on 7-hour session between 8 and 3 p.m. So here are the screenshots. So on the right, the red one is the 8 to 3 p.m. Eastern Standard Time. And the green one is the 24 hours. So both of them are 13 years, except this session is limited to 7 hours. So this is the RSI 14. And the strategy will go long when the RSI crosses. So if this is the RSI, when the price drops below and then crosses above, we will buy here. And then we will exit at 60. And when the price crosses above 70 and come down below, we will short here and we will exit at 40. So that's the RSI strategy. So if you watch this channel, you know that I usually use a very short period for RSI, which is based on Larry Connor's research. And usually RSI2 is the best for the mean reversion strategy. But I'm just going with the defaults because, when you, if you're a beginner, when you install any indicator, it comes with the default in any platform, and the default across the board is 14. So that's why I'm testing 14. And as we can see, the long trades are profitable. The short trades are extremely not profitable. And we can see that they have almost same number of trades, 80 and 79. And in total, we have 159 trades. Now, when I do it on the 24 hours, we increase our number of trades significantly. So we go to almost threefold, but still the same scenario, which is the long trades make money and the short trades loses money, but at a much lower average trade. So we're trading more, but the average trade is a lot lower. So this is 170, this is 709, and of course the loss is 286, but here is 1157. So now we go to the default stochastic 14 periods, and we can see the same story like the RSI. So all in all, we lose because the long trades makes money, the short trades loses money. And on the 24-hour session, we lose less. So you can see that the long trades, it's exactly almost the same, 61,000, 60,000. But now we lose less. So that's why we make money. But that's coming from, remember, there are no commissions in these studies. So now look, the average trade 186, it used to be 556. And the average trade, the losing trade is 79, it used to be 409. So again, they're both bad. RSI and stochastic at default, they're both very bad. So actually this brings up really good point, which is never to use the default parameters for any indicator, because you see, millions of people using those defaults, and that's why it never works. I mean, even if it had an edge, like, I don't know, 10, 20 years ago, definitely now they lost that edge because everybody installing the indicator using that default. So now we test the stochastic RSI 14 period. So now we are combining both indicators with the default period of 14. And again, the red one is the 8 a.m. to 3 p.m. session, and the green one is the 24-hour session. But again, we can see both of them, although like limiting the session time should really affect the behavior, but we can see it's still behaving the same. So we're still losing on the short trade and making money on the long trade. In the 24 hours, we lose less and we make more money. So we enhance both long and short. Of course, the drawback is what is more trades. Remember, there are no commissions, and we can see that from the average the average trade here is $100. So on the ES, this is really good. This is usable, and 73 is also kind of okay. I mean, I'm not thrilled, but it's okay. But really, $104 definitely usable. Of course, the drawdown is down below, so it's not captured in the screenshot. And finally, remember I showed you this one, the smoothing, when I took half the period. And this is now the shorter period, which is RSI 6 period and Stochastic 6 period, still smoothing 3 and 3. So again, the red one is the day session, and the green one is the 24-hour session. And again, we see the same behavior. So even though I shortened, I took half the periods, it's day session, 24-hour session, the behavior stays the same throughout. So again, we're making money long and we're losing money on the shorts. The behavior here, we enhance the losing trades, but not the profitable trades. Although the difference is, I would say, kind of small. But now the average trade is way down. This is not usable anymore. So this is now $32. It's not usable. And here we stayed at $100. So Stochastic RSI 6 or Stochastic RSI 14 both gave us around the same average trade, while Stochastic RSI 6 and 14 on the 24-hour time gave us a totally different performance. But the conclusion, obviously, Stochastic RSI is much better than both, either the Stochastic or the RSI. So this is really good. This is what testing is all about. Of course, albeit that this is a extremely lone sample. So I tested only one market, and I only tested 2 periods, and so, but still there is robustness in it, because I tested the session time, which is almost a third of the 24 hours, and 13 years. So we've seen many bull, bear markets, volatile, non-volatile markets. So all in all, we can definitely, at least on the SPY, on the S&P 500 index, we can conclude definitely the Stochastic RSI much better than using the RSI alone or the Stochastic alone. Now, of course, you shouldn't generalize this all over the place. You should just test this Stochastic RSI indicator and compare it with the normal RSI and see what's happening. Great, we banked another indicator into the series, and now we know how this indicator works and how we can use it to build strategies. Of course, if you have any questions, I'm always happy to answer them. You can comment below, questions or no questions. Show the love. I'm open to that. Also, you can join the Discord server through the Patreon link down below. And if you find any value in these videos, please do share them and smash the like button, as this will help the channel grow. As always, good luck with your trading, good luck with your investing. Stay safe, and I'll see you soon.